Hi, I'm Dan Millstone with First Capital.
So I hear there's no jumbo financing available. Is that true?
That is definitely one of the myths of the industry right now. Jumbo loans, just so you know, are loans over $625,500 and up to $10 million. And we are seeing many jumbo lenders come back to the market, both on our banking platform and on the wholesale arena. So we're very optimistic that there's plenty of jumbo money now and more to come.
Great. And can you explain the difference between being pre-qualified and pre-approved?
Great point. If you're serious about making an offer, you should be pre-approved. What that means is a lender, whether it's a banker, broker, or a direct lender, has run your credit, so you know your credit scores. They've verified the down payment and the source of the down payment, and they've verified your income. They've actually looked at your tax returns to do a full analysis of all the particulars of your financial situation, and that you meet the guidelines for what they're going to offer you, versus just a phone call and you telling them what you make and how much you have. That's a pre-qual, has very little value when you're making an offer. You really want to make sure you're pre-approved.
Okay. And can you explain the difference between banks, mortgage bankers, and mortgage brokers?
Yes. Let me start with the bank. So one of the big four, B of A, Wells Fargo, Chase, Citibank. You go in, you meet with them, they offer you their products. They have their rates, their guidelines. A mortgage broker represents banks on a wholesale level. So they might have 20 lenders that they can send a loan to through the wholesale channel. Banking is where we actually close loans in our name and then sell the closed loan. So our platform at First Capital is we're a banker and a broker. So we have the best of both worlds. So with one application, I can shop over 50 lenders, which is over 250 programs, to see who has the best rates or guidelines for your particular situation.
How can we avoid delays in the transaction?
You know, being pre-approved is one of the most critical pieces. I think a lot of people start the transaction thinking they can structure the financing how they want based on days gone by. You know, they might be buying a $2 million property thinking they can put 10% down. Those days are over. You need to put down 20 or 25% depending upon your credit score. So I think the number one thing is being pre-approved by a reliable source. The other part is knowing during the transaction, are you going to be in town? Are you going to be traveling? Do you need a specific power of attorney? If it's a condominium, knowing as much as we can about the building up front. There are a lot of particulars to condos, so the more you know as a listing agent, or the more we ask from the buyer side, the better off you'll be.
Can you explain what seller carryback is and how that can make my property more marketable?
Excellent way for a seller to really stand out in the current market. Right now, in the jumbo arena, most lenders require 20% down. So if you're a seller and you can carry 10% and allow a buyer to put 10% down, your buyer pool just expanded dramatically. And there's a lot of young professionals, be lawyers, doctors, etc., that make great income, but they haven't had the time to amass a down payment. So on a $1.8 million purchase price, if you carry $180,000 and they only have to put down $180,000, we can finance the rest. So that ability to buy a house that they couldn't otherwise buy will increase your marketability.
I'm thinking of buying like maybe in the next year. At what point should I talk to a mortgage broker? What would you recommend?
I think it can never be too soon, because all you're going to get now is a baseline. So what you do is you have your credit run now. That way you know what your credit score is, you know where can you make it better, do you even need to make it better. You have someone analyze your income to know what you would qualify in today's market, and then as you get closer, then you move forward. But it also tells you, hey, here's what you would qualify for today. This is what you would need to do in order to qualify for, say, a higher price down the road.
Okay.
But you can never start too early.